All right, welcome to the daily market recap for Monday, July 7th. In this video, like all the daily recaps, we'll take a look at the indexes, the liquid leaders, some industry ETFs, then end the video with long and short setups going into tomorrow. All right. First, we have the Nasdaq. We had a first gap down, end of the day down 0.75%. I think at one point we were down about 1.2%, and we undercut the 5-day moving average, exponential, but still rallied to close above the 5-day and above the support gap. This is the first unfilled gap down that we have from the rally, though. S&P 500 gap down, very similar action, down 0.73%, undercut the 5-day, still closed above Wednesday's close. The growth stocks of the Russell 2000, a little bit weaker, also had a gap down, closed just under the 5-day exponential moving average, but also closed under Wednesday's closing price. So a little bit of relative weakness compared to the Nasdaq and the S&P 500. ARKK also gap down a little bit stronger than the others, closed above the open, didn't even test the 10-day moving average here. And now this is consolidating pretty nicely. Um, if we resolve this higher, chances are the rest of the market is going to continue to rally. But if this is a first gap down for kind of a trend change, maybe a pullback into the 20-day EMA over the next couple weeks would be some nice consolidation. Then BTC, that's what we're using to track Bitcoin. Still pulling back, tested the 10-day EMA today, potentially putting in another higher low as this kind of shorter term base or cup and handle, whatever you want to call it. Some consolidation here while the 50-day moving average catches up. This is one of the last groups that hasn't gotten going just yet. Some of the stocks within like the theme have been working really well, but Bitcoin itself not quite breaking out just yet. Taking a look at the liquid leaders, we could just sort this by percent change today. Roblox, monster stock, only what, 1 day under the 10-day moving average, then nice reversal, then followed through today, up another 4.1%, closing at a new 52-week high. Just a monster move from $50 up to 107 without even testing the 20-day EMA. Definitely a model book stock to study. SoFi, this is going to be a new stock in the leaders list. We'll see how long it lasts for, but really good action here, a little bit extended. I do think financials might be another group to focus on in the second half of the year. The XLF ETF that we'll cover in a second here is acting well, and some of the growth stocks within that group are really starting to perk up. So put SOFI on the leaders list. GEV, great action today. Closed at a new closing high, or right at it. Higher highs, higher lows. Never even came in to test the 10-day moving average today. Energy stocks as a whole had a pretty good day, and we'll cover that in a second. Zscaler closed above the gap down zone from the 27th to the 30th. Really tight action. You got the 5 and the 10-day right on top of each other. This is another good litmus test for the market. If this breaks to the upside, the cybersecurity, one of the leading groups in the market, you have one of the leading stocks within that group breaking to the upside. That's always a good sign. If this consolidation breaks to the downside, might have a signal for more risk-off action. NVIDIA, slight gap down, but bounced to the 5-day moving average. Really tight trading today on low volume. Not much to say there. Robinhood still closing like right on the HVC, the high volume close from June 30th bar. Above the 5-day moving average, so not doing anything wrong there. But we do have the gap down from Thursday that we rallied, tested, and found sellers at intraday. So the sooner you can close these gap down zones, the better. The longer it takes typically means you'll start to see some more gap downs and further consolidation. With Robinhood, after a move from 30 up to 100 in just a couple weeks, a pullback to the 20-day moving average would be perfectly healthy overall. So some consolidation here, maybe even a shakeout pullback. Overall, to the structure of the chart would be fine. Royal Caribbean, outside down day today, down 1.6% on an uptick in volume, but still air to the 5-day moving average, still above yesterday's or Thursday's gap up zone. So can't get too picky, not doing much wrong there. CrowdStrike, gap down today, tested the 10-day moving average and support gap and bounced at that area, closed above the 5-day moving average still, but we don't want more of our leaders to have these unfilled gap down zones. That would be a sign that momentum's running out in the market and we need to kind of reset the deck. CRWV, another gap down, so second gap down, really tight price action. Just basically trading between the 20-day moving average and then today's gap down zone. The direction that we break is going to give us some more feedback in the market. If we could break and close above today's gap down zone, chances are this runs into the parabolic top. If it rolls over, maybe an undercut and reclaim of the 20-day moving average and gap zone at 152 could be a really tight entry tactic. I'm more just using this as a gauge on the market momentum. If it breaks to the upside, good. I can maybe play it to the long side or still play some other things to the long side. If it breaks to the downside and we don't have that quick reclaim of that area, then it's another sign to just take a step off the gas, maybe try some shorts out, and just to be a little bit more cautious in the market. Want to jump back to my three warning signs because we have now gotten all three warning signs that I was looking for to get concerned about the market. NAAIM exposure, if that goes over 95%, that just means that a lot of people are already in the market. A lot of active investors are already heavily in the market. We were at 81% 2 weeks ago. We had that stress test on, I think it was Tuesday, that was immediately bought up by the rest of the market. And we now have exposure at 99%, over that 95% threshold. That by itself is just a single signal. You don't want to completely change all your trading based on that, but it's the first warning sign. Second, an unfilled gap down or multiple on the indexes. We have gap downs from today for the Nasdaq, the S&P 500, IWO, and ARKK. And we're starting to see some gap down zones litter our leaders list, which is just another sign that momentum is starting to dry up. Finally, a large volume breakdown of a liquid leader. GEV is still holding up. Hood, we have a gap down zone after back-to-back highest volume in over a year. While the stock was a little extended, still not doing anything horribly wrong, but we do have a gap down zone. And then Palantir and Netflix, when I made that post a while ago, were the leaders. Palantir, we did have this heavy volume breakdown. Actually, some good relative strength today. So we'll see if this is just putting in either a lower high and then we roll back over. That would be a sign, again, to get the foot off the gas, play some defense in the market. Or if we just continue higher, then that's a sign that risk is still on and we can still play to the long side. But Netflix also just kind of trading at that 10-day moving average after Tuesday's distribution day. I think that was Tuesday, Wednesday, Thursday. Yeah, Tuesday's distribution day. Just another sign that momentum's not just leaping back into the market right now. So want to play a little bit more defense, maybe take a look at things on the short side. Going into the industry ETFs, KWEB, I'm going to keep pounding the table. I think this is one of the better looking bases in the market overall that hasn't broken out yet. Maybe after a shakeout, this is something that we can start to play in Q3 or Q4, the second half of the year. This is the Chinese Internet ETF, sold off all of 2021, 2022, based out for the next 3 years, and now getting very, very tight with all the moving averages bunching up. A breakout of this area, kind of like 34.70, could really ignite the move, and from big bases come big, big moves. ITA, this is the aerospace defense ETF, right near highs, higher lows today. A little bit of space to the 5-day moving average, but basically we pulled back last week to the 10-day and then have bounced from there. Losing that low or losing the 20-day moving average would be a change in character. NLR, great action out of some of the nuclear stocks today. I'll bring it up after this chart, but we touched that 20-day moving average that was in the support gap zone, bounced from there, and then closed back over the 5-day moving average. Maybe that was the last shakeout that we need before kind of pushing out of this consolidation. Either way, it's good that that area got defended. Cybersecurity, CIBR, very tight action above the 5-day moving average, not doing anything wrong. One of the leading groups in the market. And then semiconductors, SMH, gap down, close at the 5-day moving average. We had quite the rally up into these new highs, so some kind of pull back into the support gap at 270. That 20-day moving average probably catching up would be a good spot for some tight risk entries. Okay, going into the long setups for tomorrow. I've got a couple Chinese names on this list. TME, Ti- uh, Tencent Music Entertainment. This is a stock that I already own off of this little breakout at 1890 on the 27th. Just wanted to put this on people's radars. Let's go to a weekly chart on this. Um, Really nice weekly base here that we just started to break out from, and now we're trending higher. Broke out from 1660. Now we're back to $20. Looking for a pullback buy on this to the 10-day moving average and this gap zone at 1942. HSA HSAI, another Chinese name. Really nice base here. You kind of have a little VCP going where things are getting tighter, tighter, tighter. We did have that gap down. Gap zones are not as important for international stocks, stocks that trade on other exchanges, because you're going to have those overnight gaps way more often. I still draw them for some of them, but really, I'm probably wasting my time on that. Either way, we pulled back into the 20-day moving average, got supported. Good action today, opening on the low, closing basically near the high on a relatively weak day in the market, up 2.5%. This is one where you could take just through today's high, or if you want to do the base breakout at $23-20, that's buyable as well. Another day or two tightening up would really improve the setup overall, but if China's going to go, I'm not going to kind of belabor a point or two. I'm going to try to get in some of the liquid names in that group. FUTU, another Chinese name that I'm going to be focused on. Nice double bottom base. Got a little bit tight here, had that shakeout, rallied back up into highs. And we tried to get going today, kind of squatted on that level. Overall, just looking for a break over today's high, over 125 area as a potential entry. And then the stop would be the 20-day moving average, a little bit wider, so I would be sizing that down overall, but one of the liquid names in that theme that I'm going to be trying to track. Going into some energy stocks, we have SMR, nuclear theme. I would say is the leader of the nuclear stocks. Has traded a little funky lately, but great undercut and reclaim of the support gap below the 20-day moving average on Thursday. Same kind of action today, where the index is, the market was a little bit more weak. We undercut the low of the pullback and that support gap, immediately reclaimed at that area, closed back over the 20-day, right at the 5-day. That was really the A plus buy point at 34.50. Now we're trying to see if the market continues to act weak, if this comes in and puts in like a higher low, so like doesn't actually undercut the low of today, but comes into the support gap, then you could buy versus the low today. And there's very, very tight risk at a do or die spot for a stock that had been leading a theme that was kind of emerging. So that's SMR. NXT, I've said multiple times, I think that solar stocks have bottomed. This is a solar IPO that's already at highs. Any stock within kind of what has been a lagging theme that is already at highs is a stock that should be on your radar. For this, I'm still staying patient because we're just coming out of the stage one base. If we've already done that, still expect a lot of volatility out of solar stocks. So just have this on the radar for a pullback into the 10-day moving average, the gap zone, and a breakout retest right around $61. QS, this is going to be a performance booster only. Tons of volume coming in. It went from $4 up to 770. Has closed over the 5-day moving average on every single one of these days. And now we have this kind of 3-day pivot right around $7.10 as a potential breakout. And as a performance booster, I'm really just trying to get my size in right on the breakout. If we get any follow through, get my stop to break even. And if it doesn't play out, doesn't play out. It's a very small, tiny loss. But this is something that if the market does continue to trend higher or go risk on, this can have a pretty dramatic move. Anything that has a big move on volume comes into the 5-day but closes above it and kind of forms up a pivot is a name that I want to watch in a risk on market. ASTS, this has been on the watch list for a while. We continue to get supported at the support gap. You see these wicks underneath, but by the end of the day, institutions are soaking up the shares here because we close above it. A close below would be a character change, and then we'll reassess. But I'm just looking for kind of another pullback into that support gap, get a really nice tight risk entry versus the low of the pullback as my stop. Same idea with OUST. We already touched off the support gap on, was that Tuesday? No, Wednesday. Bounced on Thursday, did gap down today, but put in a nice hammer candle. Now we're just looking to see if the market has another shakeout, if this can come into the 20-day moving average, support gap, and $20 area. That's the spot. That's the do or die spot to try. D-Dog had the highest volume in over a year on Thursday, which was a half day, which is pretty unheard of. Then we got a lower volume pullback to today, only down 1.8%. Still above the 5-day moving average. With this, I'm looking for a gap up and then opening range break or a reclaim of the high volume close as an entry versus the low of today as my stop. And SEI, the another kind of solar name that I'm looking for a breakout retest. Again, I'm trying to be patient on these solar names because we are just potentially coming out of a stage one base. You still get a lot of volatility in that area. So instead of trying to buy on strength and then getting stopped out because the market's already extended, I want to buy on weakness on a shakeout. So looking at that $30 range, right at the 10-day moving average and kind of a breakout retest for SEI. Now to the short side, we've got 10 short setups. SEZL, great action today, undercut the 10-day moving average, undercut the support gap, and then bounced right at that area, just like it did on the 10th here. Um, what I'm looking for here is a gap up, like a big candle, and then reversal intraday that loses the VWAP as my entry tactic. The stop would be whatever the high of the day is before the VWAP gets lost. Just a name that has been on a monster move from $25 up to $180 in like 10 weeks or so since April. Um, Stocks can continue to go higher, but eventually they do come back to earth. You just want to make sure that you're on the right side of the VWAP if you're trying to play this short. Wait for kind of a blow off type action on this one. ACHR, this is one of those risk on names that when it does get going, it can rally really hard, but we're already starting to see a lot of weakness build up in this name. It made new highs on May 16th, has not made new highs since then, while the market has continued to make new highs. Put in a lower high after this gap down from there, rallied up into that area, proved that there are sellers there at the end of the day, had a third gap down with a wedge drop through the 5, the 10, the 20, and the 50-day moving average on the first. And then we've just been basically trading sideways into a bear flag into that 20-day moving average. With this, I'm just looking for a loss of $10 as a short entry. Stop would be the 20-day moving average at 1030. DXYZ, the A plus entry on this was on Friday as it rallied into the declining 10-day moving average. Now, since then, we've like sold off the rest of the day on Thursday, gap down today, down another 3%. With this, I'm looking for a rally through today's gap zone, uppercut the 5-day, and then fail at that area. Stop would be the 10-day moving average on that. QMCO, this has been on the short watches for a very long time, and it just continues to trickle down lower and lower and lower. That's what good shorts do. Recently, it had earnings and then gap down. End of the day down 10%. Had a mini rally last week, but then some weakness today, down 1.8%. Would love to see an uppercut and fail of the 5-day moving average and this gap zone at $9 as an entry. Stop, then you could get to the 20-day moving average. Have to size that a little bit down because the stop would be wider. PDYN, another name that's been on the short watch list for a while, rallied into the resistance gap, didn't even make new highs while the market made new highs, but rallied into the resistance gap, came into the 20-day, bounced, undercut the low of the pullback, put in a lower high, another gap down, wedge drop on July 1st, bear flag into the moving averages, and then a gap down today. Did close relatively well, but still down 3% today. I'm looking for a break under like 780 to kind of accelerate the move and waterfall down. RCAT, another speculative name that is starting to get these gap downs to pile up. We're right on the 50-day moving average after today's gap down. Just a break under today's low is a potential entry. Or if we can uppercut and fail at $7, that would be a tighter risk. So you could size that a little bit higher. But if you're entering on weakness, I would size a little lower because your stop would have to be wider. I think this was the first speculative name that we had on the short watch list that started to roll over. So we want to keep, just like we want to focus on the liquid leaders on the long side and keep pounding long trades out in those names. Same thing on the short side. Whatever's the weakest names, we want to continue to short. We put it on the short radar after this gap down where we kept uppercutting and failing at this resistance gap. Eventually, we got too weak, fell through the 10 and 20-day moving average, followed through the 50-day moving average, all the way down into this support gap, rallied up into the 50-day, failed another lower high, and now it looks like this is really starting to unravel. Just looking for a break under today's low as an entry. And AKA, this is another speculative name that really looks like it could just waterfall down here, just like the next one, CEP. We had this big move from $1 up to $30, uppercut the previous high to really lure in the last late buyers, fell about 60% from $34 to $10, lower high, sell off, lower high, and now we're really starting to feel heavy under the key moving averages. Today closed under the 50-day. We did bounce at this support gap, which maybe is the last kind of line in the sand. I would be taking this on weakness and just kind of pressing it for a full gap fill down to like $3 or $4, sorry. CEP, this is kind of the chart that I would be looking for with NAKA. Had that monster move from $10 up to $57. Lower high, eventually starts to break down and then just continues to trend lower. We had a nice 2-day bounce and we're already starting to roll over again. Looking for an uppercut and fail of $29.65. Stop would be like $31, like a 3 or 4% stop on that one. And finally, we have UMAC, another speculative name that did not get back to its previous highs. That's a sign of relative weakness. Recently had a nice rally from $5 to $10, but since then pulled back all the way to 770. That support gap 20-day moving average was the spot to buy on like an oversold bounce. But from there, we had a gap down today, down 8.9%. If we lose the support gap from today's low, that would be my short entry. I would love to see like a 1 or 2-day bounce, another lower high, and then trigger it. You could probably get a little bit more size on that way. So overall, down day on the indexes. Growth stocks actually handled it pretty well. We saw about 50-50 action out of our leaders. But we are getting some secondary warning signs going back to the tweet. NAIM exposure is at 99%. It's over the 95% threshold. We've got unfilled gap downs on the indexes and some liquid leaders. And we're seeing some liquid leaders start to break down. If Palantir puts in that lower high and then confirms lower, that would be another big warning sign. But always trade with the trend. You want to size up like the weakest names as they're breaking to the downside, and we'll go from there. So see you guys in the next video. Hope you guys enjoyed it. Leave a like and subscribe to the channel. Take care.